Many people have different theories on why both metals have continued to drop in the face of the conflict. When it seems like it's on, prices drop. When it seems like peace is coming, prices rise. It's been interesting to watch. But Don, I wonder what your take is on silver specifically.
Well, first thing I want to point out is this isn't a story about silver, it's a story about gold. Silver is not going to lead, silver's not going to go by itself. I always call gold big brother and silver little sister because gold's more masculine and silver's more feminine. You can understand gold, you can't really understand silver. Um, and so I always tell people don't focus too much on silver because you want to focus on gold because that's really the story. That's really if silver's going to go to 100, 150, 200, gold's going to lead. And so what are the driving factors for gold? I always say you can just ignore silver and fundamentals and even the charts. Everybody likes to look at the silver chart, right? The silver chart, if you look like right now, gold is down 28% at 4,000 and silver's down 52%. And the reason why silver went down a lot more than gold is because it had a catch-up mode. Gold was leading, leading, leading. And then last year, silver went from 35 to 120. So it outperformed to such a huge amount that it's now corrected more. But it was that 28 and gold actually went down 29. That's as far down as it went.
What if the biggest opportunity in precious metals isn't silver at all, but gold? Gold and silver have pulled back from their recent highs, leaving many investors questioning whether the bull market is over. At the same time, markets remain focused on inflation, interest rates, central bank policy, geopolitical tensions, and growing government debt. Despite the recent volatility, central banks around the world have continued adding gold to their reserves, highlighting gold's ongoing role as a long-term store of value. In today's video, we're breaking down Don Durrett's latest outlook on gold, silver, and mining stocks. You'll hear why he believes investors are asking the wrong question, why he says this is still a gold story, not a silver story, and why he views the current correction as an opportunity rather than the end of the bull market. Let's get into Don Durrett's core message.
29%. Silver's, if gold goes down 29, silver's going down 40. But in this case, it went down 55%. Now, I think there's a chance that gold could go down a little more between now and midterms. And I've been saying this, expect another lower low than we just had, 39.50. But again, this is a story about gold, but the gold bull market, for it to break down, you really have to get gold all the way down below 3,000 and probably below 2,800 before the chart really starts to break down, if you will. That's how strong the gold market is, the gold chart. So I have very little worry that this gold bull market is done. So I consider this a correction. I think most people agree with me. Both the TA guys that analyze everything and the people that are like me and John that are and analyze these things, that this bull market is definitely not over here. So this is a buying opportunity. I think the HUI, which I use to identify the minor values, is at 615. I mean, pretty beat up. It was all the way up to 989, so it's down 38%. And 615, that's pretty much, bouncing. I don't think we got much lower than this. So the miners, we haven't seen a 5 handle in the HUI in this correction. I think 615 is about as low as it's gone. So the miners have been absolutely obliterated, but this is a buying opportunity again, in my opinion. Buying opportunity. I could see the HUI going, the low 500s, but I don't expect a 4 handle. So we're kind of bouncing on the bottom here. Buying opportunity. We had 2 buying opportunities in June already. We went down to the 200-day moving average around 4,100, which was a buying opportunity. And then we turned around and we went down lower. We went down to 39.50, bounced a little bit, almost to 4,200. Now we're back to 4,000 because of the war. The gold hasn't really enjoyed this war too much. And so I think between now and the midterms, I think we could go lower And again, I just think this is a beautiful buying opportunity. I bought both of those dips, and now I'm waiting to see if I'm gonna have to buy this one as well. I'm hoping the gold trends back up. We're talking a little about silver here, but again, it's a gold story. If gold trends up to say 44, 4,500, then silver will trend up maybe all the way to 70. But I think that's going to be a dead cat bounce. I could be wrong. So if we get any rally at all here in the next 1 to 4 weeks, I think it'll be a dead cat bounce, and then you get into seasonality problems from mid-August to mid-October, and you're probably going to get another correction there. And I'll shut up.
I want to talk about gold as well. Don, you already touched on this. I think we can kind of put this question all into one in terms of the macro outlook for gold, as well as any gold mining stocks that you're looking at, as well as the gold mining sector. Because obviously, you touched on gold at the top of the show. You're expecting perhaps a potential further correction. Macro tailwinds behind the sector appear to be stronger than ever. And a lot of this sell-off could be a buying opportunity, as you've mentioned. So, Don, I'll stay with you on this one, then I'll go to John. What are you watching right now in the gold mining space? Your overall thoughts on the gold miners? Would love to hear it.
Yeah, so I'm more bullish than ever, but it's because of my macro analysis. Now, some people think that AI and basically the Fed and the fiscal dominance is going to basically keep the US economy intact, and that we're just going to keep growing. The GDP is like a train that never stops, right? And so there's no real reason to pivot over here into gold silver miners when that's a high risk area. Investors, high risk area. I'm just going to stay here with the stock market, which is working. And I don't see a recession on the horizon. Everything's fine. I have a completely different outlook on that. And so I always say that the only reason why you own a gold or silver miner is if you are not a believer in the US economy, that you're concerned about it to an extent that you actually see not only a recession coming, but a serious recession. And you can see that, and you kind of look at all the data points. You basically holistically weigh the cost benefit, the factors on the US economy. And I've been doing this for 20 plus years, and I've never seen cost benefit leaning towards gold, if you will. And the reason why is because the main one is the US bond market. So we have a $2 trillion budget deficit, and we can't seem to get it down, right? I mean, if they cut 500 billion to take it to 1.5 trillion, they would basically damage the economy significantly, right? So they can't cut 500 billion, so they can't cut anything. Cutting there's no solution there, and which is a major problem. And I've said that this is going to happen. I got into this, started buying juniors in 2004, but I actually believed in this problem that the U.S. was facing prior to that this is eventually going to lead to a doom loop. And so the bond market is really the kind of the big problem, and we call it the debt bubble, we call it the everything bubble. That's the big factor, right? But then if you start adding on kind of the problems, right? If you look at inflation, they've kind of given up on 2%, right? And we're not going to see 2% anytime soon.
Don Durrett believes many investors are making one big mistake. They're watching silver instead of gold. According to him, gold is the leader of the precious metals market, while silver simply follows with greater volatility. That's why he says if you want to understand where silver is headed, you first need to understand where gold is going. Despite the recent pullback, Durrett doesn't believe the gold bull market is over. He sees the current decline as a healthy correction and a buying opportunity, not the start of a long-term bear market. In his view, short-term price swings shouldn't distract investors from the bigger picture. His confidence comes from the broader macroeconomic environment. He points to rising government debt, persistent budget deficits, inflation, high interest rates, housing affordability challenges, banking sector risks, and growing concerns about AI's impact on jobs. He believes these long-term pressures continue to support the investment case for gold. Durrett also notes that central banks around the world have continued increasing their gold reserves as part of their long-term reserve diversification strategies. He believes this institutional demand reinforces gold's role as a trusted store of value during periods of economic uncertainty. For investors looking beyond physical gold, Durrett says quality gold mining companies may offer attractive long-term opportunities, though he reminds investors that mining stocks carry higher risks and require careful research. His message is simple: focus on gold, stay patient, and don't let short-term volatility distract you from the long-term opportunity. Now, let's wrap up with the biggest takeaway from his outlook.
And so we have an inflation problem, which isn't going down. We have a high interest rate problem, where if you want to buy a house right now, 6-7%, and most and the median price is like $450,000. So the average person, we have a housing affordability problem. We have a cost of living problem, where I would say the bottom half of the country cannot even pay their bills. They literally have to decide, okay, what in the budget this month do we have to exclude? I mean, that's how bad it's gotten. The average family below 50% can't even pay their bills, and it's getting worse all the time because their inflation is outpacing income. Then you have the bank system, where private equity is basically locking people out and taking their money out. You have banks that have really ugly balance sheet because they have all these bonds that are underwater, and they can't sell them without a loss. So you have a banking in the banking system. So you have all these main sectors. Then AI is supposed to be the so-called savior, but AI, in my opinion, is a jobs killer. So right now, people are losing their jobs. Approximately 10,000 jobs a month are being lost to AI. And on top of that, companies are not hiring people. They're using AI instead. So it's like a double whammy. And eventually, businesses are going to become more efficient, but at what cost? So, and then on top of that, it just gets worse. All of the AI spending, these companies don't know what their ROI is. OpenAI, which is one of the bigger, OpenAI, they basically already told the public, we're not going to make any money until at least 2030. We're going to bleed money. The old, Amazon, Amazon didn't make money for a long time. But don't worry. Next decade, we'll start making money, right? So the ROI is kind of an unknown asset. But it gets worse. I'll finish with this. It actually gets worse. The gold, everything I told you about gold is kind of weakness in the U.S. economy. But it gets worse because the rest of the world has been slowly de-dollarizing, where they don't want to hold U.S. treasuries. So foreign buyers of our debt is decreasing, and they don't want to hold dollars on their balance sheet. So central banks, they're decreasing their purchases of treasuries, and they're buying more gold. Gold increases have been going up. China and India, gold purchases are going up. Middle East. So we have this trend of gold buyers, and why? You have to ask yourself why. The reason why is because the U.S. economy is a juggernaut. It's like 24%, round numbers, of the global GDP. And so if there's any problems there, if we go into a recession, everything that I've talked about, it escalates. It gets worse. So in many respects, it's a ticking time bomb for the U.S. economy because of our budget problems and our deficit problems and our debt problems. And the winner, the beneficiary of all that, is gold. So it's really a philosophy. You have to kind of be anti-U.S. economy, pro-gold, and you believe that, and I do. I think gold's the end. And you don't worry about timelines, time frames. You just buy the miners and wait. It's a waiting game. We're waiting as speculators. We're waiting for basically the thing to burn to the ground. If you really want to know the truth of it all, I'm waiting for the bond market to basically break. And some people say it'll never break. They can print, but no, they can't. They can't we can't just print everything. That creates inflation and it destroys the economy, destroys the currency. So, the Bernanke thing where I was Greenspan, excuse me, the Greenspan thing that we will never default because we have a printing press, that's baloney. You can't just print everything you need. It doesn't work like that.
And gold miners that you're watching right now that could benefit from all of this you're describing.
Sure. So earlier I talked about the 12-month approach, so the high quality, the producers. So you can do ETFs, or you can look at some of the high quality producers. So the three that I wrote down is Equinox. I think Equinox Orla merger made Equinox an extremely strong company and highly undervalued. Next one I do West Gold in Australia. They're trading like a 6 multiple, a high quality mid-tier producer in Australia. And the next one, the one that has never really caught up is SSR Mining. They had some problems in Turkey, and they sold that project, by the way. And they got out of Turkey, but they never really come back. And now we have this big sell-off. So those are three high-quality producers. The developers, the 10 baggers, is 1911 Gold, which is going to go into production in Q4 this year in Canada. Talisker Resources, which is also in Canada, British Columbia, that's slowly increasing production, and the Next Gold Mining, which has they're building a mine right now. They haven't started building it, but they will start building it this year. And those might be my three developer choices.
Don Durrett's outlook reflects his personal analysis and investment philosophy. And while no one can predict the market with certainty, his central message is clear. Focus on the long-term trend. Understand why gold leads the precious metals market, and don't let short-term volatility shake your investment strategy. If you enjoyed this breakdown and want more analysis on gold, silver, mining stocks, the global economy, and long-term investing, subscribe to the channel, turn on notifications, and join our growing community of investors who are looking beyond today's headlines. Now we'd like to hear from you. Do you believe this correction is creating a long-term buying opportunity for gold and silver? Or do you think the market has further to fall? Share your thoughts in the comments below. Thanks for watching, and we'll see you in the next video.